in charge of social insurance portfolio. Mr. Mitarakis is a minister in our new government, a government that understands the value of insurance to society and the benefits of public and private sector partnerships for the common good. Mr. Mitarakis.
Thank you, Margareta, for your very kind words. Dear Chairman, you, distinguished guests, ladies and gentlemen. First of all, I only find it natural to be here in Ύδρα to address this conference. I find it natural for the government to work with industries and with all the social partners in order to ensure that regulations, legislation, and implementation of legislation is optimized for the benefits of the economy and the benefits of society. Thank you, therefore, for your very kind invitation. It's a pleasure to be here also at the historic island of Ύδρα. I find this opportunity not only to speak and present some thoughts of the government, to present our plans for the social security portfolio, but also to listen from industry participants how your industry is evolving and how that affects the way we run the public services. I welcome the thought of the topic, how does insurance fit in an evolving society and economy? In Greece, we're looking at the years to come with more optimism than we did in the previous years. We're looking to revitalize the economy, working in three pillars of priorities. Our first pillar is the fiscal pillar. We think it is critical to reduce taxation in the economy as a way to foster growth and create employment. The second pillar for priorities for this government is to proceed with structural reforms, growth-enhancing structural reforms that allow industries to grow and therefore the Greek economy to see a more rapid rate of economic growth than the current 2%, which we consider low. The third pillar of priority for this government is to strengthen the banking sector, working with the financial institution in addressing their NPEs and their NPLs in a way that will allow them to come back to the market and support the growth of the economy. I will try in my speech to incorporate some of these points, how we think they will affect social security and how they should affect the public-private partnership we envisage between the state and market participants. With regard to the industry, it's a commonplace to say, but still very true, that we live in a rapidly changing world. Uncertainty is now the norm rather than the exception. And Alexandros was very good in specifically identifying tendencies in the industry, how this uncertainty affects the insurance industry. But it's true that everyone in Europe, we face a number of social, economic, and demographic challenges. Challenges that obviously affect political developments in the continent, but this is probably for another discussion. We should underline that developments in the pension system concern everyone, concern young people, which are anxious about the future, concerns all employees that are expecting to be rewarded for the hard work upon retirement. It affects the elderly, who in recent years in Greece have witnessed many pension cuts as a result of the fiscal crisis. We should also note that social security is one of the most important, if not the most important institution of social solidarity in Western democracies. It's an institution for income redistribution in modern societies among income groups and among different generations. Our current system, the Greek pension system, was primarily designed in the 30s. And as we can see, the data of both demographic and budgetary levels were quite different at the time. The structure of the pension system so far, which is purely distributive tendency and its dependence on state budgets, make it vulnerable to budgetary pressures, something we witnessed in Greece since 2009. Together with the demographic pressures that we're facing, not only in Greece but throughout Europe, we cannot rely exclusively in a single pillar system. We can't have all our eggs in one basket. It's interesting to read the European Commission 2018 Aging Report. It projects that by 2070, the share of the EU's total population will shrink to 4.5% of the world's total population. Our country, Greece, is leading this rate of aging. We can therefore improve the sustainability of the pension system when we take into account both the fiscal challenges that cyclical economies always face and the expected strains caused by the demographic changes ahead. My objective today is to discuss proposed changes to the Greek pension system, changes that will aim to make the system open to market participants, subject naturally, Alexandre, to the appropriate regulatory framework. Prime Minister Kyriakos Mitsotakis presented before the general election his plan for a three-pillar system. Today, Greece is de facto a single-pillar system. The state pension, either called main pension or auxiliary pension, have exactly the same characteristics, and the private insurance sector, as you all well know, is not well developed. We can see that by looking at the assets under management, and we compare assets under management with other EU member states. The new system will see changes in all the three pillars. In the first pillar, we aim, inter alia, first of all, to reduce the level of pension contributions. Today, in the first pillar, employees and employers are contributing 20% of income. We aim to reduce that by 25%, by 5 percentage points to 15% by the end of 2013. Reducing the non-salary cost for businesses and increasing disposable income for households, creating in this way financial space for the other two pillars to prosper. We're looking also to a number of other important changes in the first pillar. I don't think they're relevant today, but we also need to note that there are many now cases before the Council of State, the Supreme Court of Greece, and we need to wait for the Supreme Court to rule on a number of questions affecting the pension system before we become more specific with the proposed changes to the first pillar. With regard to the total economic program I presented at the beginning, this lies within the first pillar of creating fiscal space, reducing taxes. Here specifically, we believe will allow for the market to grow. But the major structural reform lies with the auxiliary pension, and currently such pensions are also, like the main pension, pay as you go. They're calculated using a notional defined contribution formula, and pensions are set at a level to ensure that EAEE, the auxiliary pension provider, has balanced accounts. In the most recent update of the formula that calculates the pension entitlements, we use a return rate of 1.2%, which for pension standards, some may say it's low. The proposed reform will allow new entrants to the labour market as of January 1st, 2021, to participate in a fully funded, defined contribution pension scheme. We propose, therefore, a more balanced system, looking at the first pillar and the new auxiliary pension, a system which is both distributive and accumulative, so that everyone enjoys the fruits of their labour, while guaranteeing solidarity between generations. We have set up a team of experts, and the Association of Insurance Companies participates in this team of experts, and by the end of next week, October 4th, we propose to have the first guidelines for the new system. We aim to complete the legislative process in the coming months to allow in 2020 for the systems to be created to be able to launch on the 1st of January 2021. There's a lot of things we expect from the industry. First of all, to participate in forming the legislation, and you're already doing so, and we thank you. We expect you to produce products that will be in compliance with the new scheme. It's a new market, it's an open architecture market, and therefore companies will be free to participate subject to meeting regulatory thresholds. We want you to prepare for the new scheme on time, We hope that most market participants will be ready to participate by the 3rd of January 2021. And also what is very important, and I mentioned that in the breakfast I had in the morning with the board of the association, we want you to invest in creating awareness, in educating the public. We will also do the same for the people to understand how the new system works, how it affects their working life, how it affects their retirement. The 3rd pillar will remain optional, but we will provide more tax incentives in order to increase participation. And again here, the reduction of contribution to the 1st pillar will also create space for the 3rd pillar. We're also working to incorporate the ERP2 directive into national law for occupational pension schemes. There's a lot of debate how insurance companies fit within this framework, and this is something we actively discuss with the industry. At the minimum level, and I think that's an important thing to say, we aim to fully harmonize tax treatment of occupational pension schemes with group insurance products. And therefore there will be no tax arbitrage selecting one or the other. And I think that will allow both the occupational pension schemes and the industry to grow. This new pension system for some is a novelty. For people coming from other European countries attending this conference, it's a standard system that most Western democracies, most developed economies use already. Now, if I can give you just a bit more color on the proposed auxiliary pension reform, how it will affect the insured person. Each person will have his own account, segregated account, his investment will be ring-fenced, and therefore there will be a piggyback, contribution will be saved and invested, and the accumulated capital will be converted at the end of the period into a pension income stream at retirement with the option of a limited lump sum. Therefore, the auxiliary pension can achieving higher return than 1.2%, can create auxiliary pension levels above the current level. Today, let me note that the average auxiliary pension, after the many cuts we've seen in the past 2 years, especially the cuts from the recent period, do not exceed €180 a month. We will give a lot of degrees of freedom into the scheme. Individual participants will be able to choose the investment provider between the state or market participants, the age of retirement within set limits, the mixture of lump sums and monthly payments, and their own investment strategy between a preset level of low, mid, and high investment rate, under, of course, the supervision of the existing regulatory authorities. A consequence of the system, after a whole generation enters the auxiliary pension system, we think assets under management may exceed 100 billion. And that will be a very big change for the Greek economy that today relies almost exclusively in foreign institutional investors to participate in the equity and the debt market. By creating our own institutional investors, that would create long-term more stability in the Greek economy. Some people are asking why are we opening the system only to new entrants from January 1st, 2021. If we could, we would open that to everyone, but we need to manage the transition cost. And we have never hidden that there is a transition cost. We think the way we're doing the transition, will be smooth, will be better over a generation, and will be done in a way that will not affect fiscal stability. To summarize and close, two critical reasons behind our aim to change the system. First of all, we think that the current auxiliary system does not diversify risk versus the main pension. It has exactly the same risk profile, first and second pillar, namely fiscal and demographic challenges lying ahead. The way we're creating the second pillar, the auxiliary pension system, will have a different risk profile. Secondly, we think the rate of return we use today, and we have to use that rate of return because we must balance the system, is low versus return the pension system have historically achieved, is still very low compared to what current academic research indicates as the long-term returns of pensions at today's economic environment. So we're going to be ready to legislate, hopefully in the next few months. We think this is a very important change, will affect your industries in two ways. First of all, as providers of investment products, and also as providers of annuities at the end of retirement periods where people will be given the option of selecting the state annuity or will go to the market, but this, as it's only for new entrants, you understand, will not be applicable for some decades to come. Thank you so much for your very kind invitation, Alexander. I very much appreciate being here, and hopefully we'll be here next year too. Thank you so much.